Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, September 1st, and we're looking at Window Trader's market profile of SPY, IWMN triple Qs, and let's set the scene. For people who continually try to pick tops and stuff, let's just set the scene what's going on. Just picture the big boys, the Black Rocks, Fidelity, Putnam. They're all sitting on their beaches in Montauk, Spring Lake, Malibu, checking their phone every couple hours with a nice little smile on their face as they see the market continuing to go higher and higher. And the rest of us, the short-term algos, the retail traders, day traders, we're like the hamster on the wheel, just spinning it, powering this thing and grinding it higher. That will not change, my friends, until something gives it a reason to change. Free, easy money, not going to change things. There's nowhere else to put your money. Even real estate's getting almost too expensive in most places for people to try to use that as a source of income. Valuations, earnings are all meaningless. The only thing that will ever matter is if the Fed decides to change their course and where people have a place to park their money other than the stock market. To prove that point, here we are, new month, with a possibility, there's still 75 minutes to go, but with a possibility of not one, but two gaps this morning, which would be a monthly gap. Remember, we have a monthly gap all the way down at below 400. It's rare that monthly gaps hold. Well, that one's holding right now by $50, more than 50, and a possibility of a second monthly gap this morning and a daily gap. That's in the SPY and ES. Possibility also in the Qs and NQ with a monthly and daily gap. So again, keep things in perspective and trade what's in front of you. As far as destinations this morning, remember we had two upside destinations coming in after last night. They're both becoming downside destinations. So the first upside destination that we have, again, I'll give you all of them because things can change. But these 10 wide destinations, if we open above them, they become downside destinations. They don't just go away. Now, the poor highs that we had yesterday and at the all-time high, those are gone. Those are repaired if we open above them. So 451.71, which is 10 wide on yesterday. 452.49, yesterday's high, poor high. 452.70, 10 wide from the 30th. 453.07, daily high, poor high, all-time high, and 453.74, pre-market all-time high. For the downside, if we gap higher, you'll have the previous all-time highs, the monthly gap fill of 453.07. Then you'd have yesterday's high of 452.49 to fill the daily gap. In between that, you'd have 452.70 again, the POC if we open above it. Then 451.71, yesterday's 10 wide POC, and then 450.92, yesterday's low. And don't forget 450.71 and fill in another gap at 450.65, a 6-point gap from the 30th. 450.56 price probe from the 27th, and 449.99 afternoon pullback low from the 27th. So game plan for this morning. Again, people will be screaming gap rules apply. It depends on how big this gap is. Right now it's about 80 cents from the daily gap. From the monthly gap, right now it's only about 26 cents. So we'll have to see if we do gap above both of them, and if one or both hold, or if neither hold. Again, our all-time high was printed yesterday morning at 453.74. So if they ought to run up, possibly prior to the at the 9:30 opening, or even now in the pre-market, you can take a short against that to see if they front run it. That would be one short play if they were to run up against that. As far as a call play, depends on the gap. I don't care if the monthly gap fills. If the monthly gap fills and then we come in a bit, I'll take a long against the daily gap. I would be out if the daily gap fills and then reassess. So those are really the early plays for this morning. A possibility of a short against the pre-market all-time high if it stands as yesterday's. We might make a new one this morning and then back off, and we'd still have the same play. And then a call play most likely against the daily gap rather than the monthly gap. Basically the same play in triple Q also. Now, just want to see something real quick as we go to the charts on the Russell. Just want to see if that is last month's high was 227.35. So yes. So also in the Russell, you're possibly gapping to a high for the month. But keep this in mind. A lot different than SPY and the Qs. We'll be going to all-time highs. They're still within this huge 5-month balance. So definitely a different scenario there. Just keep that in mind. Now just quickly, for us on the chart, well, we're one time framing up 10 months and possibly taking out last month's high in a gap, which firmly puts us up for 11 months right off the bat. Weekly, chugging along, as you can see, and the daily. Right now, one time framing up for 3 days, and don't forget, it's an inside day we're coming out of. Remember we talk about that. I said if we take out yesterday's high out of the inside day, you should get the all-time high. Well, that's what we're looking to do. So the key is to stay above yesterday's high. I don't care so much about the monthly gap if that fills, but you want to stay above yesterday's high because it wouldn't be a good thing for the bulls to say gap above yesterday's high and the all-time high and then fill both gaps and fail with an inside day up. And also, yesterday's range was very, very tight. So any failure above yesterday's high, and you can revisit the bottom. That would be an interesting scenario if that was to play out. But again, that's getting ahead of myself. For now, the bulls are firmly in charge. Good luck trading today. Have a great day, and we'll recap at 4 p.m.